The buy now, pay later firm, known as Affirm, delivering a quarterly earnings beat, 30% increase in sales. Company also investing in new AI tools for merchants. I hear the stock's down. That's stupid. Anyway, here's what we're going to do. I'm a little judgmental there. We got first on CNBC, Affirm co-founder and CEO Max Levchin. Max, it's always great to see you.
Great to see you.
Terrific. Okay, so Max, how did your we believe in NOSing your big nothing or zero APR event do? How many people did that bring in?
A lot of people. It was a great, those of you who don't know, there's a lot of references to one of my favorite movies in my shareholder letters. That's the misspelling. But we had a really, really successful both Black Friday, Cyber Monday, but right before that, we threw this amazing event where we basically offered 0%, no interest transactions to just about every shopper in the span of 3 days. Had a huge impact. Merchants that used that opportunity to promote their services and products saw up to 27% increase in sales just in the course of 3 days. And so we're definitely going to do it again, and it was a huge success. Millions of people took advantage of it.
Some of the analysts are always concerned about whether you're going to get new retailers. To me, the issue is quite different. I think that you sign up more retailers than anyone. There was one that you lost, an outfit called Klarna. But how many retailers just each year sign up, and what kind of size?
Well, we just posted a record retailer growth metric. So just this quarter, we reported the number of active merchants increased 42% year over year. We just announced a huge partnership we will launch pretty soon with Intuit, which is a whole new class of retailers. They are aggregated on their QuickBooks platform. We have hundreds of thousands of active merchants every single month. We're available for every merchant on Shopify, on just about every e-commerce platform, and we're still signing giant players. So the one thing we're not going to run out is total addressable market in the U.S. and beyond.
Okay, now, you were doing artificial intelligence when other people were still doing spreadsheets and calling it artificial intelligence. We now have this company, Anthropic, and if they actually mention that they might be interested in your area, it just takes your stock down in half. What do you think about the prospect of an Anthropic or anyone else coming in and doing a better job than you when it comes to credit analysis and who gets to be a customer of Affirm?
That's a great question, and I think that's actually a little bit of a referendum of our times. Which businesses are ultimately durable and which ones are so pure software that they just don't get to stand on their own? We're very much in a durable business category, and that is because we don't just underwrite. Underwriting is a science, it's math, it's what I love. We've been doing this for 15 years. We're very good at it. We're specialists. We have access to a lot of proprietary data, things that we have seen and lent and either made or lost money on over 15 years. So this training set that we have is unique and proprietary to us. But beyond that, we integrate with literally hundreds of thousands of merchants. We speak with a brand that stands for no fees, no gimmicks to 26 million consumers now just in the last 9 days alone. Most importantly, we deal with a huge collection of partners in capital markets that are funding these loans. So the infrastructure that we've built, both with the consumers, the merchants, the capital market partners, that is a lot harder to replicate than telling your Claude Code to just replicate some software. So we feel great. That said, we are massive users of both code gen tools from all the companies that are playing in that space and our own proprietary AI that we train in-house and have a giant team working on. So feel very good about the new age of software production and quite secure in our position in the market.
Excellent. Now, I wanted to know whether you've been involved with the White House at all. They want to put a cap at 10%. But most importantly, what they want to do is what you say, which is they want simple interest. They don't want compound. They want people to be able to figure out how much they would owe simply just from like third grade math rather than stuff these other guys do. Have you consulted with them about what you do versus what others do?
So I'm basically too busy to consult with anyone, to be completely transparent. I'm just very focused on running my own company.
You're jammed.
I'm jammed. But that said, we can agree and disagree politically on all sorts of things. This is the one thing that I've been passionate about for 30 years now. Simple interest, upfront pricing, no late fees, no deferred. all the garbage that the industry is infamous for, it is time to get rid of it. Almost 40% of our transactions are interest-free because merchants love the opportunity to give you something at a fantastic deal. And so the direction that is being pushed, affordability, is a great direction. I think there's many ways of accomplishing it. From my point of view, the single most important thing is transparency. Just tell the borrower how much they'll owe at the end of the story. Full stop. Don't change that number. You'll get 90% of the way there.
All right. I understand that don't have as much time as you need to be able to do your job and speak to the White House. I get that. But I want to thank Max Levchin, Affirm co-founder and CEO. I've been behind this stock since it was at 30. I am steadfast on it. Max, great to see you.
Thank you.